There's a lot of volatility in the stock market at the moment. Lots of volatility, up and down movements. We are probably close to the end of a larger bull market. We could enter a larger bear market very, very soon. So today we want to take a look at, have we actually recovered enough to confirm already that we are on our way to maybe one more all-time high? Or are we already in the bear market? We want to take a look at the chart, take a look at support levels, targets, and where the market could be going in the next few weeks. Let's go. Yeah, hello and welcome to another MCO market update on the S&P 500. My name is Ben and I want to share with you the monthly as well as the daily time frame for the S&P 500. I think it's very important that everybody's up to date about the relevant levels. I mean, the interpretation can always be wrong. However, what we always offer with our analysis are key risk management levels and levels where the probabilities of the presented scenarios change. That's one of the great situations here when we're dealing with Elliott Wave, one of the great benefits of Elliott Wave, something that many people see as a disadvantage, but it's actually an advantage, that we have different scenarios. It's all about scenario planning. How can we strategically position ourselves in the markets and to be prepared for different scenarios? Yeah, and some people always say that, it's so easy to say prepare for different scenarios and outcomes. It's like anywhere in life, but the great thing with Elliott Wave is it really gives us these scenarios as well as the pivots where probabilities shift, so that we can clearly distinguish between these two scenarios, or three sometimes. Yeah. I want to start actually with the monthly chart on the S&P 500, SPX, and this is really the long-term chart. I mean, on the long-term chart, this analysis, this wave count here on the long-term chart has been whenever I started here in public to provide updates about the S&P 500, that's been my long-term chart ever since, and I can take you through it, and then you know about the importance of the current phase in which we are. So first of all, before we talk really about wave counts, you can see that there is a long-term trend line which started in 1929 at the top of a wave 1, and we touched it in 2000, after which a bear market started that lasted 8 years, 9 years, yeah, from the tech bubble down into the Great Recession. Then another rally, and we've now reached this trend line again, yeah, earlier this year in 2025. So we've got 3 to 4 touch points there, and this is one very important factor. Another very important aspect is if we look at the relative strength index, and no, the MACD actually, the MACD. That's what I want to show you. I mean, the MACD on the monthly is so high, okay, it's pretty much an all-time high territory on the monthly chart, and we've just crossed bearish. Now, the last time that happened, that was on the monthly in 2022, earlier in 2022, after which we had a larger correction. Not a major bear market, right? But we're higher now. So I just wanted to share that with you. This is something significant that I'm observing. I published that analysis, that update already weeks ago in our stocks membership. Some of you might know it, some not. We provide daily video updates about the S&P 500, the NASDAQ, the ES futures chart. Yeah, NASDAQ, S&P, and sometimes there are even the Dow Jones, Hang Seng Index, DAX included. You'll find a link to that membership in the description. I've also pinned it in the comment section. So if you're interested in updates, including stocks updates, they are included as well, NVIDIA, PayPal, and so on, then you can check out the different plans we have. But I published this before and just highlighted, look, be aware, we're touching that trend line, and it's led to a reaction, that touch of the trend line. Yeah, we even broke above it briefly. Bear in mind, this is the monthly chart, but it's not a break above really. So it is a difficult area here, just based on structural resistance, that trend line, the MACD, which is completely overbought and is now crossed bearish. And we could even say that on the monthly chart, I mean, you see that momentum is coming down, kind of, right? The lower high is on the RSI as well here on the monthly. So it is something to keep an eye on. These indicators are only used really In addition, they're not used to determine wave counts, but they can be used to confirm structures and to help us understand where we are, what the risk is and everything. So the idea is that we are, based on the wave count, either already in a bear market, we just don't really know it yet. I mean, okay, the market declined like 20% or a little bit more from the all-time high. Some people already call that a bear market, but they are the same people who already called for a bear market. I think it was in autumn last year, which didn't happen. And I wanted to see further confirmation. Movements to the downside are so far just corrective. We haven't got any confirmation from a structural point of view that we're in a bear market. That 20% decline it's just something that people say, like then we start to talk about a bear market, but it's not really a structural bear market yet. But I think we're close. The question is, have we started a bear market or do we get another rally? But either way, we are close to the end of, or have already finished, nearly 100-year long lasting bull market. I mean, this is like a nearly 100-year long lasting rally. It's a 5-wave move up, 1, 2, 3, 4, 5. And the question is just, is that 5th wave still extending a little bit or not? Now, if you take a look at this, I mean, this is nearly 100-year long. So it's not going to be easy to pick the exact top, right? So it's highlighting the broader risk in the market while being cautious, not being bearish yet until we really get confirmation. I think that's, being cautious is not the same as being short or bearish. That's very, very important. People misunderstand that sometimes. Still looking at potentially one more high in this bull market. But yeah, I mean, if we then zoom in a little bit and we look at the movement to the upside from the 2009 low, this is 1, 2, 3, 4, 5. I mean, that 5th wave might still extend a bit. It's quite a complex structure, but overall we have enough waves in place to call that 5-wave move completed. And what happens afterwards? Well, I mean, my concern is that we might be dealing with a larger degree wave 4, something similar that happened between 2000 and 2009. I mean, that was a nearly decade-long correction. Bear market, yeah. I would expect something similar, maybe even larger degree. Okay, so, and that would be a bear market that probably I will not never see again probably, okay? Now, I don't want to create panic, and I just want to highlight that, people need to deal with this, need to understand the risk. I'm not calling for this, I just highlight the risk. These are my concerns. If that really happens, it would be a disaster for society, I can tell you that. I believe the banks will collapse first. So that's going to be one of the first of the, dominoes that's going to fall over. But there are alternatives. So I'm not saying, if we break smaller support that we're going to head into that decade-long bear market, but the probabilities will increase. I'm going to track a 1-2 setup, which is more directly bullish. But what I'm tracking for is that if it starts this larger correction, there will probably be an area, probably around 3,500 or so, where even just the A wave of the wave 4 could bottom. But it would still be a large decline, right? Like something similar to here. And we could get a larger rally again. So it's not going to go down only in a bear market, right? And then we can go down. It will depend on this rally that will tell us, are we actually in a bear market or are we in maybe, something more bullish? But either way, the risk of this decline, this initial decline, is quite high. Let's take a look at the shorter time frame. So I just want to help you understand the context. So this is just a shorter time frame, just a daily chart, just shows us the structure from the 2022 low. And here I'm just following a structure where we can say, hey, maybe we've topped, major top already in, okay, or one more high. I would actually prefer one more high. Just because the pullback is corrective so far. We haven't broken critical levels. We have broken some support levels in recent months, but not major critical levels. I can still make the case for another high in the yellow scenario. Don't worry, I'm going to zoom in a minute so you can see all the levels. But what I want to show you zoomed out is just here. Look, we have a potential larger degree 4th wave low that formed in October 22. I've got a wave 1, I've got a wave 2. I can call that all a 3rd wave. I can't count 5 waves up yet. Difficult, yeah. So this would be a 4th. It's steep, but it held the golden ratio level at 4,795. So I can make a case for potentially one more high there in this 5th wave to the upside. It's just something I am tracking, something that is valid, something that we can still go with. But as you can see, this is an ending diagonal. The subwaves are all corrective ABC structures. So also that fifth wave is likely an ABC structure. Something to be aware of. Yeah. If we now zoom into the 4-hour time frame, and if you're wondering, okay, it's an ABC structure, why is that important? Because it will make it very, very difficult to determine whether we have actually started a bear market, which is based on corrective rallies, or it's the fifth wave up, which would also be characterized by a corrective rally. I've put it out there like weeks ago where I told members we probably won't have the luxury to deal with 5-wave patterns. So we're likely going to deal with 3-wave patterns, across the board, probably, for the time being. But if we see any 5-wave move down, any impulsive move down from somewhere here, from anywhere here, it would set the stage for a decline to new lows, essentially. So therefore, we are, we reacted to initial support. Good. That keeps the yellow scenario alive for one more high, maybe into the 6,500 plus region. But it's corrective, so we won't really know until the next pullback whether it's yellow or white. When this move up is finished, and we should over the coming weeks, I would say, see the market go a little higher into the resistance area, maybe even touch the 78.6 retracement. At least that's going to be the idea, as long as we're holding micro support, which is 4,963 to 5,230. So as long as that holds, we could easily test it again, maybe for a reset of this B wave. But for now, I'm tracking here the C wave, and that might be wave C of white B, which would then set the stage for lower, or it's of the A wave, then a higher low in B before we rally in C. I prefer yellow, but that's personal. I mean, the market hasn't made a decision yet. That's how I read it, because we're dealing with corrective rallies only. So it's about understanding, once this rally is over, what is going to be support for yellow B, and I'll keep you updated about that. So yeah, that's the update. The very last thing I would like to do is just to show you, if we zoom in a bit, what would be an ideal projection for this C wave to the upside. Yeah, and that would be the 100% extension, and that takes us to round about 5,837. So yeah, 100% extension, very close to the 78.6 retracement. And when would I assume that we've already topped and we're already heading into a bear market? Earlier than expected, because at the moment I'd like to have at least a little higher in the C wave. Well, I mean, first signal if we break below this support, further confirmation if we break below the April low. Yeah, that's the update about the S&P 500. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And also make sure to check out our S&P 500 membership. Again, it includes the NASDAQ, it includes the S&P. And depending on which tier you choose, you also get the live charts, and you also get updates about gold and silver. It's not officially included, but there are bonus updates in there, plus additional stocks. So thank you very much. Have a great day. Bye-bye.